If an assignment is deemed to be outside IR35, then a client must ensure that reasonable care was taken during this decision-making process and that the decision itself was reasonable. So there are a number of tools available for assessing employment status. HMRC, Check Employment Status for Tax tool, otherwise known as CEST, is a free online solution which is available through the HMRC website. There are also specialist IR35 consultancy tools provided by companies such as Grant Thornton, and we're aware that some businesses have in-house assessment software and processes in place which they're using to manage this process. Once one of these tools has been used through a consultancy period with a contractor and usually a hiring manager involved, then a status determination statement or SDS is produced. Some of these are already starting to flow through from our clients, and we're aware that some are also still very rapidly working through these to complete them. So once the status determination statement is completed, if there is a reason for appeal, then a process for appeal must be in place. The legislation imposes an obligation on the client to provide a client-led status disagreement process, and either the recruiter or the contractor may disagree and follow the process. There is a time limit on this. The client must respond to a request to review the status determination within 45 days. And then the client will need to confirm if the determination is correct and with the reasons for that, or provide a new status determination statement reaching a different conclusion and withdraw the previous one. It's important to remember if the contractor disagrees with the determination, they will need to write to the client and give reasons why. Fee payers must ensure that records of status determinations and any corresponding disagreements are kept on file, and that's the responsibility of Taylor Hopkinson. During the dispute process, the client's determination does stand. So how are our clients responding to these changes? We're obviously working very hard to communicate across the board with our clients and our contractors. There's many moderate responses with completion of internal audit and risk assessments. While we're awaiting final government announcements, everybody is aware that there are further announcements to come. We were expecting these mid-February, however, we're expecting now that that could roll on into early March. The new Chancellor of the Exchequer, among other developments, have potentially delayed these announcements. So we're working with external consultants. Our clients are auditing and assessing all roles and implementing the required changes on completion. We're also aware that some businesses are rolling out policy changes around PSC engagement, in some cases ceasing to work with PSCs completely. There is a general review ongoing of contracts and working practices to understand the potential for alternative models, and this is a positive development where companies are working hard to deem how they can work within the rules but continue the relationships that they have. And there's an ongoing communication which is vitally important directly with ourselves via our clients and also Taylor Hopkinson to contractors. So just an overview of some recent government updates. There obviously is an ongoing review and consultation happening within the government, and we were expecting that mid-February we should have some updates regarding this. That obviously leaves a very short period of time for developments and updates to contracts and payroll models to happen. However, we're working hard to allow that to happen. As the budget won't take place until the 11th of March, the subsequent finance bill containing the full draft final legislation for these rules will only be published a little over 3 weeks before they're due to take effect. However, the work is now being completed from now to make sure that with as much notice as possible, determinations are completed and people have a notice period to change any setup that's required. So other updates recently, the Chancellor, our new Chancellor, Rishi Sunak, has confirmed that he's been communicating directly with HMRC and working hard to ensure that there's a soft landing for all companies and contractors affected by IR35. Yeah, the continuing focus and pushing for a potential delay to this legislation and this update to the rules, it doesn't seem to be at this point in time going to happen. So we're working on the purpose and with the policy that it will happen in April, and with tweaks and improvements expected, we'll work hard to make sure that those are managed. So I'm now going to hand you over to Leslie, and she's just going to give another overview of the ongoing updates. Oh, apologies, Anita.
No problem at all. Thanks, Fiona. I'm going to give a little more background to IR35 and the changes that are coming into force in April this year. I'm going to talk about the rules that are currently in place, how they're changing, and what the changes mean from a tax perspective. So IR35 isn't new. It's been around for about 20 years, and it's all about employment status. For tax purposes, unlike employment law, there are only two types of employment status: employed and self-employed. IR35 is concerned with those who are self-employed via a personal service company or a PSC. So just as a reminder, if you're an employee, you're subject to income tax and employee national insurance on your earnings, and this is withheld from your pay. Your employer is responsible for withholding that income tax and national insurance and paying it over to HMRC. And your employer also incurs additional costs in the forms of employer national insurance and possibly the apprenticeship levy. As an employee, your contract is a contract of service, and you have certain employment rights such as holiday pay, sick pay, and certain dismissal rights. If you're self-employed and you're operating via a personal service company, a PSC, there's more flexibility in how you can access your earnings, and you can manage your affairs so that you may pay tax at a lower rate than you might as an employee. So for example, rather than being paid fully by way of salary, as an employee would, you could receive a small salary below the personal allowance and not pay any income tax and employee NIC. Your PSC could then pay you a dividend, which again would be taxed at dividend rates, which may be lower. Your engager, the client that you're working for, also doesn't have any requirement to pay any employer national insurance in respect of the services you provide. As a self-employed contractor, your contract with your engager is a contract for services, and you are not entitled to the employment rights that an employee would have. So typically, we see contractors engaged by the following methods: either directly by the engager or the client, by the engager via their personal service company, via an agency, or their personal service company may be engaged via an agency. The IR35 rules are only concerned with those methods which use a personal service company, so method 2 and 4 in this slide. In the absence of a personal service company, the usual employment status or agency worker rules would apply. So what is IR35? As I mentioned before, it's been around for a number of years, and it was introduced to prevent what HMRC perceives to be avoidance of PAYE and national insurance. As I outlined earlier, using a personal service company can enable the contractor to be paid in a way that would give him a lower tax rate than if he was a straightforward employee. So IR35 was introduced, and it requires the relationship between the contractor and the end user to be established to see if it's one of disguised employment. So an engagement will be disguised employment or inside IR35, where a contractor works for a client through their own intermediary, which is usually a personal service company, PSC, but they would be an employee if they were providing the services directly. So how do you assess whether a worker would, for tax purposes, have been an employee of the client if working directly for that client? There's no statutory test to determine employment status. Instead, an individual status is determined by application of tests determined by case law. This slide summarizes the main factors relevant to determining an employee's status. And HMRC have provided guidance on those that it considers most important. The guidance does make it clear that this is not an exhaustive list and you have to consider the overall picture when looking at each engagement. So looking at some of these factors in turn, some of them are more indicative of self-employment. So substitution, for example. If the worker is entitled to provide a substitute, then this can point towards self-employment, as can financial risk. Those individuals who risk their own money, for example, in training costs, are less likely to be employees. And a self-employed contractor often provides whatever equipment is needed to do the job. Factors which may indicate employment are things such as mutuality of obligation. So HMRC consider that as a minimum in an employment relationship, there must be an obligation on the part of the worker to provide his work and an obligation on the part of the engager to pay the worker for their services. If the employer has the right to exercise a certain degree of control over the worker, this can also be indicative of an employment relationship. So where are we at the moment with IR35? Under the current rules until April, it's the personal service company that has to look into these employment status tests and determine whether the worker is a deemed employee of the end user. So in this slide here, we have UK Limited, which is the client or the end user. We have JB Limited, which is a personal service company of Joe Bloggs, the worker. So at the moment, Joe Bloggs Limited, JB Limited, has to assess whether Joe Bloggs is an employee of UK Limited. If the determination is that Joe Bloggs is not an employee, then UK Limited can pay the invoices without deducting income tax and NIC to the PSC. And the PSC, JB Limited, can then pass the payment to the worker, possibly by way of a small salary and a dividend, as discussed. Under the current rules, if JB Limited decides that Joe Bloggs would be a deemed employee of UK Limited, then UK Limited can still pay the invoices to the PSC gross. JB Limited then has to pass that payment to the worker by way of a salary with a deduction of 5% to cover expenses. So why is this changing? Well, HMRC consider that only 10% of personal service companies who are required to operate the IR35 rules are actually doing so. Because of the number of PSCs, they don't have the resources to challenge each and every one of them. So they've changed the burden of responsibility for assessing a worker's status from the PSC to the end user or the client. So the changes coming into force in April are not a new tax, but they are a change to the process of collecting income tax and NIC. So what's going to change? From the 6th of April, the requirement to assess whether a contractor is in fact a deemed employee shifts from the PSC, JB Limited in this slide, to the end user, UK Limited. In this example, as there is no agency between UK Limited and the PSC, then UK Limited is also the fee payer, and as well as making an assessment, must withhold income tax and employee NIC from payments made to JB Limited if it determines that Joe Bloggs is a deemed employee. And UK Limited is obliged to tell Joe Bloggs that they are a deemed employee before payment is made. And this is via the status determination statement that Fiona referred to previously. These new rules have been enforced for the public sector since April 2017. They're being extended to the private sector in April this year, but they'll only apply if the client is a medium or large company. If the client is a small company, they are not required to assess employment status, and the responsibility to make the assessment and withhold tax remains with the personal service company. So what happens if the arrangement is more complex? So for example, there is an agency between the PSC, JB Limited, and the end user, UK Limited. In this case, the roles of assessing status and the fee payer are split. The end user, UK Limited, is still required to assess the status of the worker in respect of that engagement. It then passes its status determination to the worker and the agency. The agency then becomes the fee payer and has to withhold income tax and employee NIC from the payment made to the PSC JB Limited. If there's another agency in between Agency 1 and JB Limited, then the status determination is passed to the second agency and that agency becomes the fee payer. So that's a summary of the changes to the Off Payroll Working Rules, IR35. And we thought it might be helpful to talk through some of the frequently asked questions that we see around this. So as a recap, the changes coming into force in April shift the burden of assessing the employment status to the end user and withholding income tax and NIC from the PSC to the fee payer. In some cases, the fee payer and the end user will be the same entity. In others, the client will be the end user and the fee payer will be an agency further down the chain. So some questions were asked around the assessment process itself. So the client or the end user has to take reasonable care in determining the worker's status. If they fail to do so, then they are also responsible for deduction of tax and NIC. When they've determined the status, they pass a status determination statement to the worker and to the agency where applicable. So what's reasonable care? Well, that differs based on the circumstances of the client, but HMRC have provided some guidance. This includes accurately completing their Check Employment Status for Tax or CEST tool or applying HMRC guidance. It also includes the requirement to make a new determination if there are material changes to the worker's terms and conditions or working practices. A bit later, we'll look at some of the questions that assessment tools such as CEST or Grant Thornton's own tool use to make the assessment and come to a status determination. Is there an appeals process? Yes, Fiona's covered that earlier, so I won't go into that any further now. But another question we have is, from a client perspective, do they need to assess outsourced services? And if a client enters into a contract for a fully contracted out service, then these rules do not apply and they don't need to make an assessment. Whether a contract is for a fully contracted out service is a matter of fact. So just calling a contract for labour a contracted out service or a statement of work will not necessarily prevent the rules from applying. Again, HMRC have provided guidance and some examples of those contracted out services which are clearly contracted out and those where they are in fact likely to be a contract for supplying labour. Finally, residence is an important factor. The question here is around the client being based overseas. If a UK resident worker provides services to a client abroad, then the IR35 rules will usually apply, irrespective of where the services are provided. National insurance may not apply, depending on the individual's circumstances. The key point to remember is that the IR35 rules don't change the existing tax rules around residency. If the worker is UK resident, they're typically subject to UK tax on their worldwide income and may well be within the scope of IR35. If the worker is not UK resident and not subject to UK tax, they won't be brought into the UK tax rate as a deemed employee under IR35. There's also some common myths and concerns that we see around IR35 and the changes. One of these relates to the interplay between the construction industry scheme, CIS, and IR35. The new IR35 rules take priority over CIS. You first need to consider whether IR35 applies, and only if it's not in point, then consider whether tax needs to be withheld under the construction industry scheme. Another concern is that HMRC will inquire into earlier returns if a contractor is deemed inside IR35 from April. HMRC have clearly stated that they will only open new compliance checks into returns for earlier years for that individual if there's a reason to suspect fraud or criminal behaviour. A common misconception is that if you are undertaking engagements for multiple clients, then you're automatically outside IR35. That's not the case. Assessments need to be made for each engagement, taking into account the facts and circumstances of that engagement to consider whether you could be inside or outside IR35 for that particular engagement. And finally, there's double taxation. If the payment received by the personal service company is net of income tax and NIC because IR35 applies, there is a concern that when the worker then extracts cash from their PSC, either in the form of a salary or a dividend, they'll suffer further income tax. HMRC have confirmed that in that case, the worker is not charged a further income tax and national insurance on any dividend or salary that they subsequently receive from the personal service company. As I mentioned, there are various tools, and as Fiona mentioned as well, there are various tools for assessing whether somebody is inside or outside IR35, what their employment status is. And there's some uncertainty around what the process is for these assessments. What's included on this slide is just a few of the questions that we use in our tool to determine or to help the end user determine whether the worker is inside or outside of IR35. As you can see, they cover various topics, such as who decides when the individual carries out the work, who decides where and how the work is completed, does the worker have a right to send someone else in his place, and have they actually done so? Have they previously refused an engagement that was offered to them? Are they responsible for paying their own training and development? And are they responsible for correcting any errors in their own time and cost? And is the individual or the company, the end user, able to terminate the engagement without any notice or reason? These are just an example of some of the questions. Our tool has a total of around 42 questions which drill into the circumstances of each engagement, and CEST, HMRC's tool, also has a number of questions. But this has given you a flavour, hopefully, of the sort of detail that's taken into account when determining status. I'll now pass you back to Fiona.
Thank you, Anita. Okay, so following on from Anita's overview there, we're going to pick up in the circumstance following the completion of IR35 assessments and give you an overview of Taylor Hopkinson's planned timeline and activities in light of those assessments being completed. So we expect completion within the legislation, and the draft legislation guidelines will be completed between January and March of 2020. So our clients are working hard to finalise assessments and communicate the determinations to us and contractors directly. So in the circumstances where a status determination is outside IR35, we will be consulting with contractors, continuing to work with them on an ongoing basis, communicating the status determination statement and holding that on file, and issuing an updated contract accordingly. We will continue with no changes to the payment structure, and a new status determination, however, must be completed per new assignment with that client or any other client. Should an assessment be deemed to be inside IR35, again, we will be informed of the determination, communicate directly with contractors. Appeals will be submitted if relevant, and once that process is completed, off-payroll working models will be agreed and updated contracts issued by Taylor Hopkinson. Also, any other documentation around tax may be requested at that point. We will then begin off-payroll deductions as relevant for services carried out from the 6th of April. So these activities will be completed by the end of March. However, deemed employment deductions will begin from April in line with the rules. Okay, so if you are deemed, or your assignment is deemed to be inside IR35, how can Taylor Hopkinson support? So we're making several options available in terms of alternatives to an off-payroll model. However, we must caveat that this can only be in line with an agreement from a client in terms of how they wish to proceed and any policy changes which they have put into place. So options include inside IR35 deemed employment deductions, which is where an individual would continue to engage as a contractor through PSC or limited company, and Taylor Hopkinson will calculate a deemed employment payment using our new in-time and pay software. This does not involve any fees to contractors for this service. There's also an option for an individual worker fixed term contract for services, a similar vein to the first option. However, this would be a self-employed contract and directly with an individual. Again, no fees apply to contractors for this service. The third option, umbrella company employment. We're able to provide introductions and discount rates with several regulated umbrella companies who are Financial Conduct Standard Authority regulated. Fees do apply with these umbrella companies, however, other benefits are also included along with insurance. And finally, as Anita had mentioned, statement of work contracts is a consideration where appropriate. However, again, this would be on a case-by-case basis and in line with a client confirmation of that being an appropriate way to work. So in terms of benefits of our deemed employment deduction service, we really want to continue using the same systems and providing an efficient process, which would mean that our monthly timesheet system can be utilised for processing on an ongoing basis. The continuity of service from our support teams and finance teams will hopefully ensure that any transition is smooth and efficient also. No fees to contractors or workers. Taylor Hopkinson are absorbing the costs for setting up this new system, and our finance teams are working hard to ensure that the resource is available within the next week or two. However, we do need to note that employers' national insurance is an additional liability that needs to be considered. And transparency, we're making a commitment that we will deduct and remit required taxes and national insurance monthly in line with the legislation, and make this information available for audit and any other review which is required for contractors or clients. So I guess keeping the communication lines open is vital. I'm now just going to hand you over to Leslie.
Thanks, Fiona. So one of the options, as we talked about, was deemed employment, and what Taylor Hopkinson can offer is to make the deemed employment deductions directly from your PSC. So in this example, calculation would be is based on a current day rate of £300 per day, to account for the employer's national insurance liability. A revised contract rate of £257.10 would apply, and this calculation is for a full week of 5 days at the revised rate, where we'd make the PAYE deduction and the national insurance deduction. So you can see that the net there would be just over £926 per week. When we compare this to, we have two umbrella companies that have provided us with their calculations. So as Fiona touched on, you get additional benefits there as you are deemed as an employee of the umbrella company. So their deductions and fee, depending on the value of expenses that could be reclaimed, come out between £942 per week and £1,028 per week. So again, that calculation is based on an original day rate of £300. And a second umbrella company calculation for the same day rate comes out with £929. So again, just to caveat, these are indicative calculations and would be dependent on your personal circumstances. The second calculation we have is based on a current day rate of £750. So again, on the same basis, the calculations, a revised rate of £642.75 would apply in this case, to give a net pay for the week of just over £2,000. Compared with the first umbrella company, ranging between £1,969 to £2,170, depending on expenses. And finally, £2,045 net pay from the second umbrella company. Again, dependent on individual circumstances, and we can provide calculations on personal day rates to you should your assignment fall within IR35.
Okay.
I'm just going to pass you back to Fiona.
Thanks, Leslie. Okay, so now we're just we're going to cover some more frequently asked questions, and then we're also just going to have a quick look at how these changes can be affected or affect employment law and employment status. So some of the regular questions that we are being asked, can I be forced to pay for employers' NI? So fee payers cannot lawfully deduct secondary NI from an agreed fee, but recruitment businesses may adjust contractors' pay rate to factor in the additional costs of supply, which include employers' NI. So depending on contractual terms, there may be scope for rates to be negotiated accordingly. Do I get employment rights if I am inside IR35? So if you wish to continuing operate as an inside IR35 contractor, you will not benefit from employee rights as such as holiday pay, sick pay, pension contributions, or dismissal rights. You may receive these benefits through your employment in your PSC, however, or if you are to work through an umbrella business. If your assignment falls inside IR35, it's likely that you're no longer in business on your own account and could be in scope with agency worker regulations. Under agency worker regulations, you are entitled to comparable pay to a permanent employee on the client site. If you opt to engage via an umbrella company, you are therefore an employee of the umbrella company, and you will benefit from employment rights, and AWR will apply. In my final slide, I will revert back and just give a bit more of an overview regarding agency worker rights. Okay, so I work for lots of clients. Does IR35 still apply? The off-payroll rules will still apply irrespective of how many clients and assignments a contractor is working on. There is an argument if you're working on multiple projects for various clients, this will demonstrate that you're in business on your own account and therefore will fall outside IR35. However, status is assessed on an assignment basis, and working for multiple clients is not a significant indicator of being in business on your own account. The status for each assignment is judged on its own merit. And again, length of contract or assignment. This is for 2 years. Is it automatically inside IR35? The 24-month rule is referencing to claiming travel expenses, and it has no bearing on the status of an assignment. And just finally, this is some words from our legal advisors, and that's just regarding employment status, employment law. So the relevance of the Agency Worker Regulations 2010 on IR35, just something to be aware of, where different types of intermediary provide contract resource through PSC. There is an approach which will mean that agency worker rights have to be considered. However, the agency worker rights do not apply where a PSC contractor or individual is self-employed. So in other words, if the agency, Taylor Hopkinson, or the hirer, our client, is a client or customer of a business which is run by the contractor, then the agency worker regulations will not apply. This is because there is a requirement for the hirer to provide supervision and direction over the contractor for the rules to apply. So that's really an overview, which is, again, a movable feast, and we're keeping a close eye on agency worker regulations as developments come in April 2020. So thank you very much for your time, and thank you, Anita and Leslie. What we'd like to do now is we've had some questions that were submitted prior to the webinar, and we've also had some come through while we were speaking. So we would like to address these. There are several which we will directly respond to by email following the call. However, what we'd like to do now is just cover the list that we've got here. So the first question, have you produced examples of typical deductions for the options that you've suggested? And we're looking for some sample figures and model calculations here. So obviously we've given a couple of model calculations as part of our webinar today, but in terms of an individual basis, we would be addressing those individually with yourselves on a case-by-case basis, depending on your own day rate and also your own circumstances. Second question, how would the options listed cater for a contractor's requirement to invest in equipment for their business? Example, test equipment, commercial vehicles, etc. Anita?
Well, certainly from an IR35 perspective, if the worker is deemed to be an employee, then when you're calculating the payment that they receive, you'll start with the gross payment, deduct VAT, and then deduct any direct costs that the PSC has incurred in respect of materials. Then you would deduct any other allowable expenses, and I mean allowable under the employment rules, to come to what is the deemed payment and what's subject to tax. So from an IR35 perspective, there is an allowance in respect of materials and costs to the PSC there.
Okay, thanks Anita. Next question is, which umbrella companies are you recommending? So obviously we've identified a couple of umbrella businesses as part of our presentation today, and those are companies that we'd already identified as working within IR35, and we're certainly able to pass on their details. We're also working on a preferred supplier list for umbrella companies, and we're happy to share those details with individuals after the call. So the next question is, can I keep my limited company?
Yes, you can. You can continue to operate through a limited company. As I mentioned before, operating via a limited company, which is a personal service company, will bring you within the scope of IR35, which means you will be assessed, and you will then be issued with a determination as to whether you are a deemed employee or not. Just because there's an assessment requirement doesn't mean you will automatically be a deemed employee. It may well be that the facts of the engagement are such that you continue to be self-employed. So you can continue to use a limited company. It's just that you need to be aware of the implications of the changes to IR35.
Okay, next question. What expenses can I reduce from my tax rate?
So again, if you are within IR35, you're effectively a deemed employee, which means that you are allowed to, expenses can be deducted, but only those that would be allowed for a typical employee. The most common example here would be travel expenses, so costs of travelling from home to your workplace, for example. These are not allowable expenses, can't be reclaimed tax-free if you're an employee, and in a similar way they wouldn't be able to be reclaimed if you were a deemed employee.
Thank you. There's another question that we've had which says, what things would bring me outside IR35? I suppose we've already covered a few points in terms of how the assessments work. There's no one area that really would be focused on. Anita's sample of the questions that would come up in an assessment is really just a group of some of, I think, 40 questions, and the weighting obviously varies on those. So really there's no one area. However, I think some of the slides previously would give an indicator of how those assessments are determined. Okay, next question. With each project or contract being with different clients and then having a mix of inside and outside IR35, will this not cause an issue for contractors chasing outside IR35 projects?
Essentially, yeah, the project itself won't necessarily be inside or IR35. What would need to happen is each engagement is assessed. And as we mentioned previously, there are also some aspects of the contractor themselves that would feed into how that assessment comes out. So it's not quite as simple as to say there will be roles that are inside and outside IR35, as each engagement has to be assessed separately and has to take into account the circumstances of the particular contract.
Okay, and next question, will paying national insurance become mandatory regardless of which project you're working on?
If you are a deemed employee under IR35, then yes, you must pay employee national insurance. And as mentioned by Fiona previously, employer national insurance is payable by the fee payer, which may well be the agency, and it may therefore have an impact on the rates agreed out.
Okay, and just another couple of questions we have. What is CIS?
Oh, apologies. CIS is the Construction Industry Scheme. So again, it's been around for a good few years, and it's just a method by which HMRC are able to collect income tax from construction industry workers.
Okay, thank you. We've got a couple more questions. Which is better in terms of take-home salary, inside IR35 or permanent employment?
That entirely depends on your personal circumstances. It may well be the case that your employer offers some salary sacrifice arrangements, for example, which as a deemed employee under IR35 you cannot access. By the same token, as we've mentioned previously, there are some expenses such as on machinery and materials that can be deducted if you are operating by a personal service company. So I'm afraid there's no hard and fast answer to that. It comes down to each individual.
Yeah, I'd agree.
And could we give more information on whether fixed term contracts are available outside IR35? Again, really, the contract isn't what would be assessed. It would be the assignment. The type of contract that is then put in place would be as a result of the assessment. So there is a potential for a fixed term contract to be in place for a role which is deemed to be outside IR35, but only in the circumstance where that assessment is completed. Okay, so I think that's all the questions that we're able to answer for now. We have several others which we will revert back to individuals with also, and we will be sharing this recording with all attendees and anybody who was not able to attend also. I would just like to take an opportunity to thank Anita and Leslie, and also thank all of you for listening. We appreciate that there's an ongoing, this is an ongoing area of development, and we'll continue to communicate on it. Also, we're available by telephone or email at any time for further discussion and remain available to support you. Thank you.